Welcome to Bears in Exile. Today is Friday, May the 3rd, and this is a quick hit on the indexes. Starting off with the Dow. So, last night, made a case for both sides. I thought that the Bears had a decent chance, and that if the Bulls were going to make a move, that a gap up through these multiple resistance areas would be the best option for the Bulls. I didn't know if it was going to happen. Didn't really think it was going to happen, but definitely said that that was the best thing for them to do if they were going to do it, and that's exactly what they did. They gapped right on through and just totally destroyed and annihilated the Bears, ripped their faces off. And there it is. The Dow up 142 points, a little bit off of its highs. Not able to maintain the 15,000 mark, but it did pierce it. And just barely outside the upper Bollinger Band. We obviously have a new high, and that is massively bullish. Massively bullish. Beyond that, where do we go from here? Well, that is very interesting. Beyond a new high, we have most things pointing up. MACD histogram, RSI, stochastics, 14-day RSI moving average, and the CCI. CCI is very high. Does need some relief. We have a blip in the heat map. But new high, what does that tell us? It tells us at the very least there should be a reattempt at that high, either to break it, make a double top, make a failed double top, etc. So while you can look at this and say, oh, it's super extended, etc., etc. Yes, but this does change a few things. At the very least, we need to see a reattempt at the high at some point in the future. And assuming that it breaks again and again, then we have to wait for it to happen at that higher level. Now, on the Bears side, I know that this is, how can you even talk about the Bears having any chances? Bears do not, don't have anything going for them. Well, on the SPX chart last night, we were talking about new current negative divergences because it had made a piercing higher high, which made those negative divergences possible. The exact same thing has happened on the Dow today. Negative divergence on the CCI that could be busted. Negative divergence on the stochastics, maybe that could be busted, maybe. Negative divergence on the RSI, negative divergence to a much greater extent on the MACD histogram, and a negative divergence on the MACD itself. Does that mean that we go down on Monday? No. Well, it's entirely possible just to relieve a little bit of this, and because a retest of the previous higher high would be completely natural. Does not mean that we get a big turn come Monday. Going on to the 60-minute time frame. You can see a lot of things. For one, I'm going to zoom out of here a little bit. We now have a flag pattern. Here's the flag. And here is the waving banner. This is a bullish setup. So it comes up, it consolidates, and then it goes up again. Today was, in my opinion, the destruction of the Bears. And I would assume now you get people to chase. So while it could be extended here at this moment, you now only have to push it above 15K. The CNBC and the news and everyone says, oh, you're missing the rally. and all the retails jump on board for the exhaustion move of this entire big move. So, do I have confidence in the bears at this moment? Absolutely no. Absolutely no. Beyond that, does it look like you could get a short-term pullback? Sure, of course it does. Stochastics moving down, CCI moving down, RSI massively high. Nice peak on the MACD histogram slanting down, MACD losing momentum towards the end of the day. But it's all about getting people to chase at this moment. So do we have all those negative divergences in the 60-minute? Well, the stochastics was busted out today. So that is gone. The CCI remains, the RSI barely remains, that could be busted, and the MACD histogram also remains in the 60. But like I'm saying, waiting for retest of the high, waiting for a double top or a failed double top at some point up here. Going on to the SPX. Of course, new recent high. And everything else is the same as the Dow. No need to rehash. Going on to the VIX. We were saying last night that we were having really good support in this level right here, and that if it broke, we would most likely be going in for the remaining gap fill right here. And it did gap down, making a new gap above us, and it was just tenacious. Standing pat all day long. In all actuality, it should have melted away more, but it didn't. And beyond that, we still do have good confluence for moving down, which we were looking at the 14-day last night and everything else still pointing down. And so it all came down to this support, which they gapped through. I'm not a fan of gaps in this way because it is much better long-term to fight through a level. But this is what happened. Going on to IWM, small caps. We were saying last night that the candle and the position was not great. It looked worse than the Dow, looked worse than the SPX, but that there was always the possibility of a catch-up move since it has done that several times in the past. But yeah, it did look worse. It did. Today, gapping above most of the resistance, and finishing off the rest with the regular move up and the pierce. Does this one look bad in the daily at this moment? Most things are either pointing up or trying to move up, so really not that different from the down SPX in that getting people to chase. Would not be surprised one bit for this to go higher. And the candle is not a great candle. It's an upside down hammer, but I do think that chasing is completely what can happen at this point. And the most important chart probably of the entire night, SPY. And yes, it has a very pretty hammer here at the top. I don't know that that is going to make any kind of a difference. We had higher volume, but we didn't have a volume climax, which normally happens at turning points. So can this be gauged as a turning point? Probably not. And the chase is on. But going to our volume information, I was warning last night that the possibility existed that we could have some new items turn green, and that is exactly what happened. Accumulation distribution continues to march up. We got a green on the dual volume flow, boom, and we got a green on the volume weighted MACD, boom. We now have 4 greens, giving more credence to the idea that we will be going higher and people are going to chase. It's just what it is. And we're now really going to be getting into danger for the volume price trend, that turning green, and then having 5 greens. Big, big problems for the bears. What can you say? They had it gift wrapped many, many times the last 2 weeks, and each time they would just drop the ball or just give it to the other team, and this is what has happened. So, unfortunate. But on the other hand, at some point, somewhere down the road, they'll get their turn and they'll actually use it, and then it will fall more. But for the moment, it is what it is, and it could get to a lot more pain for the Bears here in the short term. They'll probably be scratching their heads, shaking their heads, gnashing their teeth, and but that's the way this game is played. Steal from one side and then steal from the other side, and there it is. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.